All right, let's turn to Europe now. It's in focus as well, of course. This is the sterling slumps to historic lows. Let's get over to Steve Leisman. He has a special guest for us as well. Steve.
Yeah, David, thank you. Very special guest. I'm here in Cleveland at the inflation conference, but I am joined by Philip Lane, member of the executive committee and chief economist for the European Central Bank. Philip, I have to start with what happened in England the last several days. There has been a concern about the workings of the bond markets causing the Bank of England to reverse course and do quantitative easing or purchasing of bonds there. Does it raise concern at the ECB about market functioning and liquidity in this tightening process?
I think there's no direct read across. But what is true, I mean, central banks everywhere do have the responsibility to make sure the bond market functions. So I don't think I would use phrases like quantitative easing or reverse course for this type of intervention. I think it's perfectly correct and sensible to simultaneously make sure that markets work through this type of intervention. And in fact, it enables or allows the hiking cycle that is intended to continue if you make sure the markets are stable.
But what about the idea that you could be raising rates to a point where things in markets break?
Again, I don't particularly think this is the analogy we're seeing from the UK experience. But let me take your point in the sense of the overall issue of is it the case that we can see bond market overreactions? Is it the case we can see bond markets repricing to such an extent that leads to unintended consequences, generates hidden issues that were not obvious on the surface? Of course. So, I mean, let me come back to some basic principles here. This is essentially why, to give you a very basic explanation, we are saying we know we're going to do several hikes, but we're going to do them over several meetings. You know, trying to do too much in one go is exactly the situation where you might get absorption issues in the markets. So it remains the case, even when we've made, for us, sizable moves, there's still the step-by-step, keep the market aware that we're on a campaign over a number of months, not trying to do everything in a few weeks. So I think that's an important principle. But then, of course, what's happened in the UK was essentially a lot going on, a lot of news arriving, and you also have to allow for sometimes the unexpected happens.
For example, from the fiscal side. Let me move on, though. You talked about rate hikes coming. What kind of guidance can you give people about what the ECB is going to do next and how far it's going to go?
So we can be super clear in a directional sense. And super clear is that, at the very least, we have to move away from the policies of the last several years of super low rates. So this is why, having been fairly persistent with very low and indeed negative rates and a lot of balance sheet policies, this year we've moved fairly smartly, including the last two meetings, where we now have the deposit rate at plus 75. Now, what we're clear about is we know if the data we see today persist, at the very least, we need to get to some version of the neutral interest rate, while being extremely clear that, in fact, under today's conditions, going above neutral may well be on the cards. But what we also need to be clear about is there's lots of uncertainty. We do not need today, here we are, end of September, to take a strong view about what 2023 looks like. Let's get these several hikes done, and then we can see what 2023 needs. So is smartly the euphemism in ECB talk for 75 basis point? This is a backwards-looking comment on the fact that where we've come from minus 50 for a long time to zero, and now to plus 75. Yeah. But what I think it's very important is the way we've decided to handle the uncertainty we're facing is to take a meeting-by-meeting approach to the exact calibration. It's still 4 weeks away. It's a month. There's a lot of data to see between now and then. So I think this debate about what exactly is the next move is something we will decide on the day, and it really is not particularly helpful 4 weeks out from the meeting Philip, to discuss the last margin of this.
Shepard Smith here. Thanks for watching CNBC on YouTube.